I'm Jennifer Christian and I work as a portfolio specialist in the investment management team, and I'm going to provide you with a brief overview of this week's market summary. While US-China trade tensions dominated market sentiment last week after the US said it was considering blacklisting up to 5 Chinese surveillance firms, there were a couple of positive minor developments. The US may temporarily ease some of the planned Huawei trade curbs, and China's ambassador to the US said that China is ready to continue talks and is committed to forging a new trade deal. However, given Donald Trump appears happy with the current impasse, we should expect the current trade friction to continue for many more months, if not years. Last Wednesday's minutes from the last Fed monetary policy meeting were slightly disappointing, as they showed that policymakers thought their patient approach to US interest rate changes would remain appropriate for some time, and reiterated their view that the recent weakness in CPI inflation is temporary. While the minutes were mildly hawkish, we still believe that US interest rates have peaked and that the Fed will start cutting rates in the not too distant future, given soft CPI inflation readings coupled with the increase in trade tensions since the last Fed meeting. Likewise, last week's weaker than expected UK inflation reading, core CPI was unchanged at 1.8%, continues to undermine the Bank of England's insistence that UK interest rates need to be higher. In the UK, Brexit took centre stage, not because of the European elections, but because of Theresa May's new Brexit deal proposal and her subsequent resignation announcement last Friday. The odds of a no-deal Brexit have now risen, as the next leader will need the support of Conservative Party members, and given the success of Nigel Farage's Brexit Party, the Conservatives are unlikely to appoint a moderate leader. That suggests that Boris Johnson or another hard Brexit candidate, such as Dominic Raab, is the most likely to succeed Theresa May. Although the FTSE 100 fell just under 1%, it was supported by a slight weakening in the pound, and it is worth noting that a weaker pound is good for the FTSE 100 as it boosts returns for exporters and the value of overseas earnings. However, it was India that was one of the best performing equity markets over last week, as Narendra Modi was re-elected as Prime Minister. Now that's all from me this week, and don't forget, if you haven't already, you can also read a more detailed insight into matters affecting the markets in the email.